There is an apocalypse coming. The media is going to create it. It's going to destroy wealth as you know it, according to the media. And you need to prepare for it. Hello, my friends. Brett Pattison here with Iron Gate Global Advisors, coming at you from the financial capital of the West. That is Salt Lake City, Utah. Thanks for taking a few minutes of your day to join us as we talk about the next big apocalypse that the media is going to create. We will not only talk about that, which is an important subject to prepare for, but here's what else we're going to talk about. We're going to hit current market conditions. Where are we in the market? We will discuss historical look back. What can we learn by looking at history at this time, specifically at this time of the year? And, of course, the next great apocalypse. What is it? What are you going to hear? And how can you prepare for it? So that's what we're going to hit on in the next few minutes. First off, current market conditions. Since the election of the Donald, the market is up nearly 13%. Which is fantastic. Leaving political everything to the side, this is great. Everyone that has exposure to the stock market is wealthier today than they were back on election day, and that is great. Now, I've had a lot of questions regarding the run-up of the market relating to, is the stock market expensive or is it cheap? And that's something that everybody wants to know. And we monitor this and we have our opinion. And our opinion is that we're somewhere in the middle. We believe the S&P 500 is at fair value. We're not expensive. We're not in bubble territory like you've heard on the news. We're not cheap. We're somewhere in the middle. And that's not a bad place to be. Certainly, we would love to be a whole heck of a lot cheaper because it's easier to find investments to buy when the market's cheap. But we're not. We're at fair value, and it's becoming harder and harder to find stocks to buy. But we spend our time every day looking through sectors, finding companies that we like, and doing a ton of research to determine whether a company is not only cheap, but whether it has great growth potential for the future. So that's where we are as far as market conditions. We like where we are. We don't love it. We like where we are. We're optimistic that it will continue, but we wouldn't be surprised if there's a 5% to 10% pullback, which will go hand in hand with the apocalypse we're about to talk about here in a second. But if that happens, it'll be nothing more in our minds than a great buying opportunity. So if you see it, be happy, because it could be a great buying opportunity. So that's where we are now. Now, as far as historically speaking, as everybody knows that watches these videos and that talks with us, we really have no idea what's going to happen in the future. But we do look at the past to help us determine what may happen if historical norms hold true. And in March, since the early 1900s, the S&P has averaged about a 1.2% return. In April, 1.5%. And so these 2 months that we're in March and then in April next month are typically really good months. And then May comes along, and May slows down. 0.2% is the average as we enter the summer doldrums, which is normal. But historically speaking, we're at a good time. And that goes hand in hand with us being optimistic and the economy, which we'll talk about here shortly, which is humming along. So that said, let's talk about the main topic for the day, which is the next apocalypse coming to a TV near you. Now, let's hit not what's coming next, but let's take a look back. And I'm going to just flash a few of these great apocalypses on your screen. And some of you will laugh and some of you will go, oh, I remember that. And hopefully it reiterates a point, right? And that is Y2K. Once that clock was going to turn over in 2000, the world was going to blow up. It didn't. Y2K turned out to be nothing more than a clock and a calendar flipping over. The bird flu. Everybody was wearing those masks. It was going to destroy countries. It didn't. U.S. defaulting on its debt. I vividly remember this because it was such a great buying opportunity. The debt was downgraded. Everyone thought we were going to default on our debt. We didn't. Everything was fine, but the buying opportunity was fantastic. But that was going to destroy the United States. Ebola. This is a more recent. You can see the bird flu, Ebola. People freak out. The market goes down on those fears, and it's going to destroy countries. It didn't. They got it under control. Mankind is really quite remarkable in quickly handling these apocalypses. Going back to last year, just a few things that you heard. Right out of the gate, the market's worst start to the year in the history of mankind. And it's going to get worse. And it didn't. It got better. That's one thing you heard. Then you heard Brexit last summer in June. How Europe was going to dissolve. It was going to sink into the ocean. Europe is done because England voted to ditch the EU. It didn't. Brexit was another great buying opportunity. And this next thing that occurred, for some people, still is going to be the next apocalypse. And that is Trump winning the presidency. Futures were down as the electoral votes were coming in. Futures were getting hammered, and it's done nothing but go up since. The remarkable thing is that the world refuses to end on any of these events, and the market continues to move higher. And most of those things that you see on your screen were media-induced fear that caused great concern for no reason. So why does the media do this? Why does the media create fear? And all of you know the answer to this question, but there's the chart that shows it. And that is anytime there's great fear in the market, the bubble bursting in 2000, the financial crisis 2008, long-term capital management crisis, right? All these different things create this great fear, and viewership goes up, marketing dollars goes up, they make more money, and as all is well in the world, viewership goes down. That's why the media create fear. And it's not just CNBC, but it's all media. And what drives me nuts is the newsletter writers. They're the worst. Buy gold, buy some rice and some ammo and a helmet and go into your basement and lock yourself in a room. Right? No, that's not the kind of thing that you should be taking action on, my friends. And so to help to prepare you so you don't overreact to the next great apocalypse, let's talk about what it could be. All right, so here's the situation we find ourselves in. We've got an economy that is humming along, doing very, very well. I'm not going to get into the nitty-gritty and bore you with the details. Certainly would be more than happy to talk about it if you want to. You can call me. But the economy is humming along. Commodities have rallied off their lows, and it's down a little bit this week, but for the most part, they've rallied pretty strongly. Interest rates are moving higher, as we all know, and the PPI, the Producer Price Index, has risen faster the first few months of the year than the prior 4 years. So we've got an economy that's doing very, very well. Things are going very good. And so here's what you're going to hear next. And in fact, I started to hear about it this morning. The next crisis, the next trouble, the next meltdown, the next fear that could come is the I word, inflation. Inflation is going to destroy wealth. It's going to kill the stock market. That's what you're going to hear. In fact, inflation is going to lead to hyperinflation, and we're all going to die. All right, I took that kind of extreme there, but that's what you're going to hear. Because of the debt that the globe has accumulated, which I don't think it's good. It is bad, but it's not going to cause hyperinflation that's going to destroy your wealth. In fact, we look back at historically speaking, at all of the high inflation times that the market has dealt with, and all the returns for the stock market were mixed. There were good times, there were bad times, to the point to where we really couldn't come up to a conclusion whether it was good or bad. It was mixed. And so our piece of advice to you all is to continue doing what you should be doing. And it's our process. And clients know that we manage their money. They know what we do. And that is, we're going to continually look for good companies trading at great prices that can potentially, no guarantees, that can potentially give our clients great returns. That's what we're going to look at. The price you pay for an investment, a good company, is very, very important. You've got to manage risk appropriately as you do that. Do those things and you'll be fine. Bottom line, prepare yourselves, because this is what you're going to hear and what you're going to see in all the financial media here in the next year or two. Now, here's the thing that you'll never hear from the media. They would never say the following, and that is probably the best advice that they would ever tell you, which you'll never hear on their airwaves or in their print. And that is this: you've got to find a good fiduciary manager, someone that can manage your money that you trust. You've got to save and invest more of your money. Max out tax advantage accounts and focus on long-term goals, not short, volatile movements of the stock market. And the last thing you need to do is relax. That's the best advice that the media could ever give, but they never will. Because if they did, viewership would drop like that. Our advice, again, relax. At Iron Gate Global Advisors, we can remove that fear. We can talk you through it. We can take it from here. If you have any questions, feel free to reach out to myself. I'm at the bottom there, Brett@igga.com, or my friend Brian, who is our value stock extraordinaire, Brian@igga.com. Feel free to contact us. Be more than happy to talk to you. Thanks, folks.
This is a purely public broadcast and is not intended to be personalized financial advice for any individual's specific situation. Each individual's financial situation is unique, and the topics discussed on this broadcast should not be relied upon and/or considered as personalized advice. Specific financial securities discussed are not intended to address any listener's particular financial situation and should not be considered recommendations. This is for educational purposes only. For more information, please contact Iron Gate Global Advisors at info@igga.com or by calling 888-591-0334.